Okay. There we go. Oh, fingers crossed.
See if you got that one right.
And I'll tell everyone I'm very sorry about that effort, but we're back.
So we're going to repost a new link.
Yeah, if you can. I had to post a new link as well. So sorry about that, everyone watching at home. And I'll keep an eye on the comments. Woohoo, I think it's working. Yes. Sorry about that, guys. 130, and I made you all go and click a new link. So I do apologize. Technical issues on a Friday night. But we are going to walk through the dollar, gold, silver, Bitcoin, some crypto. Troy's setup is ridiculous, says Bill Murray. You don't like showing us the front of your head, do you, Troy?
I don't mind. I can look at the camera if you like. Just full on with the screens.
Aussie cricket team is on tour, says Mega Spear Gun. So, guys, we'll just give everyone a minute to tune in. If you guys don't know Troy and Kyle, they're some traders from Australia. Troy is in Victoria. That's why he's got his mask on.
Wait, that's Kyle.
Oh, sorry, Kyle. And Troy's over in New Zealand. What stage of lockdown are you at the moment, mate?
I don't even know, dude. We can do whatever we want, really. It's Auckland that's having the issues at the moment, and New Zealand here.
Yeah. Well, we'll just have a little bit of a chat before we get into all the charts. We'll try and take some questions at the end if you guys want to leave them now. But basically, last night was the big announcement about Powell and the dollar, and he promised us that it was going to be a historic speech about inflation.
Right.
For those of you that didn't watch it, I watched it all. Did you guys both watch it all?
Yep.
Yeah.
You did? I think I have the quote here that I shared. So this is inflation will now target an average of 2%, meaning that these periods of sub 2% inflation, like the Fed have really struggled to get that number for a long time now. So being through that period, they're now going to try and target higher inflation to get up to like an average of 2%. And so you sort of say, well, if you're at 1%, does that mean you're going to try and get to 3% that next year?
Exactly.
And
right.
they said, well, no, we don't have a formula. There's no exact science here. So once again, it's kind of moving the goalposts. And, it used to be this employment number, and then it was inflation. And it really is just trying to juggle these balls as best they can. So did you have any thoughts on that, Kyle? Because you are the one out of the three of us that has studied economics and finance, I think, more than anyone else at least.
Yeah, well, I mean, like, the interesting thing is that they've changed it from, targeting 2% to targeting, an average of 2%. And so they're saying that if you're going to get an average, then you have to have it higher than 2% sometimes. So I was thinking that he was going to actually say we're actually going to target like 4% or something like that in the short term. I think a lot of the market thought that as well, which is why when he first started talking, it was like every single time he said inflation, the market would pump. We're all talking about it. Disco, we're like, say inflation again. And so it was taking off. And then obviously he didn't really commit to anything. It was just like, it ended up becoming a bit of a nothing announcement. And then obviously that's when the market fully reversed and nuked, right? But I think overall, even though he didn't commit to anything, he's basically saying that we're going to let inflation go up anyway, which is overall still very, very bullish for hard assets, right? So gold, silver, Bitcoin, etc. So that's why we've seen over today, even though it had a really strong pullback, we've seen today the assets have taken off anyway.
Yeah, so I think for people at home, like the bad path that this could have gone down was making some trade-offs and saying some if, buts, or maybes, that if we're going to go down this path and some other, we're going to have to sacrifice another area or whatnot. But the way that it ended up was basically saying we've printed $3 trillion in a few months, which is more than ever. And we're not really that worried about inflation. If anything, we kind of want inflation. And that's signaling to the market that, like we've spoken about in other episodes and in our groups, all of us, and on Twitter, the Fed don't want to go negative. They've kind of made that clear compared to these other countries. Yeah. And so for them, it really is the only foot that they can put on the floor is the QE. And do they buy longer dated bonds or shorter dated bonds? Do they start to dip into some of these other mortgage markets or possibly the ETFs? Or any thoughts on that, Kyle?
I mean, what I think they're going to do is they're going to start putting like more infrastructure programs and stuff like that, and possibly continue to give out like more stimulus checks and stuff like that, just to keep the capital flow flowing throughout the market. Because as soon as you have the capital flow start to slow down inside the economy, that's when, you know, people start to freak out and they're spending less, and then that's when you start to get that retraction. That's when, you know, you start to lose inflation instead of inflation going up. So I think they're going to try and do everything they can to obviously keep that pushing forward and keep the inflation going up. But I'm not 100% sure what, you know, I mean, I think it's a hard one to pick what exactly, you know, the different methods they're going to choose to keep that capital flowing throughout the markets. You know, are they going to do it through, you know, bonds and things like that, or are they just going to do more checks to people to keep them spending and keep them in a happy mindset and, you know, a free sort of spending mindset? Because I think a lot of it is just about people's emotions, right? Like, so much of the market is about emotions, and they're trying to just keep people in a state where they're freely spending capital in the economy. Because as soon as people start to panic, then they're not going to spend, and then that just creates a snowball effect, and we end up in a recession. So I think that's the main thing. That's why they're very timely with their announcements as well. I mean, those are the main things that I focus on without trying to get stuck too in like the really deep details of things, because that can be pretty confusing for a lot of people to get when you get down deep into that stuff. And especially if you're like just a casual Bitcoin trader and stuff like that, it doesn't really affect you that much as long as you have the overall picture. So
so on the screen here, you guys can see this as well. Is that right? So you've seen this chart a lot, people at home. This is the M2 money supply for the US. So this is in trillions of dollars. Billions of dollars, I'm sorry. So 16,000 is 16 trillion. So basically, just as we've gone into February here, bang, we've gone from 15-ish up towards 18 and a half. So 3.5 trillion. But at the same time, this is the velocity of money, and we're back into the 90s now, where it peaked around the dot-com bubble and, you know, the internet age, and a lot of money and a lot of spending. But it's just been falling off a cliff. And recently, like literally a nosedive down towards a velocity of 1, meaning every dollar in the economy basically only turns over once during a year. Now, we compare that to the crypto market, where I shared some data and charts the other day about how some of the stable coins like DAI have a velocity of 20. So that shows you how quickly all the money's moving around those markets. But I think one thing that really stands out to me as someone that hasn't studied economics or finance is that we're still having this debate around what is money and what causes inflation. And this big debate about the difference between reserves and money. And you can say that the Fed have created reserves because they've only printed this and given it to the bank to buy assets off them, or just to inject it to encourage them to lend, but it's sitting in the bank at reserves. So this money isn't being lent out to people to start businesses or anything like that. At the same time, the money that is in the economy has stopped moving. So it really shows you that they're kind of saying, we're really willing to do this. Like, we're going to keep doing trillions at a time until we get some sort of inflation or uptick in velocity of money. And we're not really scared about that either. Like, and that's kind of where the market, I think, is a little bit nervous, because never in history has anyone been able to, I guess, put inflation back in the bottle to this extent, where they've been printing so much. And it's a lot different trying to put 5 trillion back in the bottle, or trying to raise interest rates and saying, wow, we did too much, we've got to raise rates, when you've got record household debt or record corporate debt. We've already got record corporate defaults, and then you're going to try and raise rates on people. So it's almost like they don't have a brake, they don't have a stop pedal, but they're encouraging inflation. And I don't know, like, do you see this in a different light, having studied all this stuff, Kyle?
Well, I mean, that's like, some people are getting worried about like hyperinflation and stuff like that, and maybe it ends up getting out of control. But I mean, if you listen to everything Powell's been saying all year, and anybody else from the Fed, like, they don't seem to be really that concerned about it. So, and then, there's something that Raul always talks about is, that there's all this extra debt in the rest of the world market. A lot of it's in China and stuff like that. And, that's going to, that has the demand for the dollar, so they can keep printing more and stuff like that. So there's that whole other factor to it as well. And I don't want to go down a rabbit hole on this because I'll be talking for too long. But I think that they can keep printing capital without it becoming too much of an issue, and we are seeing a lot of it just go straight into hard assets. Which is good if you're a crypto, a Bitcoin holder, or if you're into gold or silver or something like that. I think that trend will continue on. I don't see them pulling back on that for a while.
Yeah, and I use my sausage machine analogy where they're putting all the the meat in, or whatever, the money in this case, and they're trying to get sausages come out the other side, and they keep looking at it and going like, why isn't it working? And all this money that they print, it's kind of going into the markets or going into the banks, and it's not going into the economy. So the commitment that they're making by saying they're going to continue this for a long time, if nothing else changes, if they don't change tax rates or announce big infrastructure programs or do direct checks, if they don't change anything, that's basically saying that gold, silver, these other assets are going to continue to go up at the rate that they've been going at the moment. And that is really exciting for traders, and that's why we've seen stocks break out to record highs when last week everyone was telling you stocks are going to crash. So Troy, do you want to show us your charts of the DXY, because I know you've been doing a lot of stuff on the dollar.
Sure, man, I can further.
And everything's priced in the dollar, as we saw last night and today. The dollar's looking very nervous, like on a cliff. And if that falls off a cliff, you'd think that everything priced in dollars is going to go up.
You see that?
Thank you. I'll put that on full screen. Yeah.
Cool. So the DXY has just we've been tracking it since up here, and it's just when we broke here, pretty basic and obvious triangle type pattern here. Got to a point of pressure and broke down. And then Bitcoin went on a nice run here, and the same thing applied here. We're just seeing a little bit of a different price action happen down. Well, not price action, but behavior down here on the market. The structure is more of a trading range than a upwards move like this. When price drags up like this, it's usually pretty bearish. Usually you see price move down and dips like this, and then take off. Where when it grinds up like this, that's usually a bearish sign. So we're seeing a dip this time here. So we're getting those dips this time. So I do think we're going to get a bit of a rally shortly. I don't know what's going to cause that. But we're also getting bullish divergence down here as well in the very, very far oversold area. So what this is saying is a lot of the assets are overbought, and it could be a bit of a pullback. So if we look at charts like gold, silver, and the stocks, they're all bloody vertical right now. Look at Tesla and Apple. I'd say there's going to be a dirty throwback soon, and this is going to demand some respect for a little while. And if we look further left again back here, something similar to this is what I would assume would play out. It turns into a bit of a typical head and shoulder fractal pattern, and then it'll probably fake out and carry on down because, as Jerome said, they have no intention of stopping or slowing down, which is pretty much very bullish for all markets. But at the same time, what I'm seeing here on the DXY is more of a bullish fall. These declines like this is a bullish fall, where this is a bearish fall, right? We're just free falling. So need to pay a lot of attention, I think, to this. The way to pay attention was just track these lows here, the candle body lows on the daily, right? And then when price or when the DXY reclaims these, if we lose this over the weekend or not over the weekend, sorry, be closed over the weekend, but on say Monday or Tuesday, if we get it closed down here, if and when it closes back above here, it'll most likely print another bullish divergence because the candle body will be lower here, but the RSI will be higher here. And if we get the third bull div here, I'm going to assume there'll be a bit of a bounce off the 786 fib, which is usually when you map an entire move like this, where price goes back to the reject, right? This is usually the first target. So if you're going to look at any, like say, Bitcoin chart or something, if I can just quickly clean this up, I'll just take 2 seconds to show you. But I think it's quite important. Jump out on the daily. Go back to our moon run, right? Just drag those fibs really quickly. And say here down to here. You can see this is where Bitcoin ran to as well and rejected. So the DXY is now doing the complete opposite to that. And we're coming down to here. And I think that's going to be a bit of a target. So when the DXY does tap down on the 786, I think that'll be the time to really pay attention to all your assets paired against the US dollar, because I think they'll start to pull back and smart money will start to take some profit. if this does fall and we do come down here, I think Bitcoin would go to 14K. I think that's the narrative here. So if we remove all the squiggles off the screen, if we do fall here, this means that gold, silver, the SPX, and the rest of it are just going to completely go vertical for a little bit, like we're seeing Apple and Tesla do right now. And once that hits that 786, then it'll be time to pay a lot of attention and get ready to expect a reversal, I think, on all markets. They seem to be moving in sync right now, and the DXY is a great indicator for that. For the people who chart Bitcoin dominance, if you guys know what that is, anyone who's listening and watching, right? The DXY chart is technically, how I see it, the Bitcoin dominance of the world, of the global markets. When this decides it wants to go for a rally, just like Bitcoin dominance, which is this chart, right? When this goes for a rally, all the altcoins pull back, right? So we're currently falling down in bullish behavior onto the 618 fib. So when this comes down from here, Bitcoin will hit its all-time high. This will take off back to this 382, and the DXY would have bounced as well off the 786. That's my theory on how it's going to play over the next few weeks or next few months.
Yeah, and it's on the if you want to stop sharing now, on the dollar. If the dollar falls another from 93 to say 91, it's around a 2% fall. But for people at home, because these are, trillion-dollar markets, that little 2% can really lead to, 50% on Bitcoin or another.
Yes.
I really think that gold could get to 2,300 if we have this last sort of push up. And if you look at the chart and say, wow, gold's gone from, a year, really it's almost doubled if you look at it on that long-term chart. So those little moves in these trillion-dollar markets can lead to enormous moves in these other asset markets. Like silver is such a tiny market, even more so than Bitcoin, because of all the paper silver that's traded. And so we've had a phenomenal run. If you look at what Bitcoin's done from the bottom to where it is, or from gold to where it's gone, and gold's a $7 trillion market and it's still nearly doubled. That's when I think we'd have a lot of noobs piling in, retail traders lined up buying all this gold, and that's when we can have these corrections that go for weeks and months. And remember, was it last year when gold had a good run and Bitcoin went to 14K, and it's the same thing, and everyone piles in, and then they sort of look at the charts, and you need to correct and have some sideways months or whatever. And I think that would put in almost like the big Elliott wave, off the lows, and then it's that corrective time, and then we get into next year and it's behind COVID, hopefully, and then people go, right, where do we go from here? And maybe that's a scenario where all the central banks are going, well, hold on, we can't really take away that honeypot now. And that's when all the investors come to this realizing this narrative of, oh wow, it's multi-trillion-dollar deficits forever. And that's when gold and Bitcoin and that can go to these astronomical numbers. Any thoughts on that, or any charts you want to share, Kyle?
On gold, I can have a look at gold for you.
Anything we spoke about, dollars.
We'll look at the dollar as well quickly, because I've got a really good chart on that for you. So let's go take a quick look at that. Just in terms of gold, I have a few friends that are quite successful stockbrokers. And they've got extremely high targets for gold. Some have even talked about as high as 5,000. So it's definitely a chart to watch for a while. But for me, the DXY, we're sitting on this really long-term trend line at the moment. And it's all the way back from the start of 2011, right? And so we've got multiple touches there, and it's sitting on that right now. I feel like if this breaks through, and it's sitting like right on it at the moment, if this breaks down from here, I think we're going to drop very quickly to around 89 points in the dollar, right? So that's going to be a pretty big pullback. But I think probably their target is, if we go on the weekly, it's a little bit easier to see. But I think the target is within this red box is sort of where they want to be operating in, which is where we spent most of the time when we were recovering from the global financial crisis. Because as you can see, this is 2008, right? This is when we had the global financial crisis. I think this is the space where they want to be operating back in. So I think that's the target for the US dollar. I think we'll probably sit sideways on here for a while, which is when we might have that sideways action in Bitcoin that you were just talking about, right? We have a month or a couple of months sideways action, and then probably another dump off, and then we have the sideways action through the DXY through here, right? Silver is looking really good for me right now. It's been one of the best markets to trade. and it's looking great. Just having a little bit of a breakout at the moment. I think it's going to follow gold. Let's get gold up 1 second.
Hit that like button, guys. We've got 700 watching. Thank you very much. Drop some questions, and I'll keep an eye on the chat as well.
So gold looks like a bit of an Adam and Eve bottom right now, and it's looking good for it to start moving up. I think the gold target is probably going to push up to about 2,000 at the moment. But in terms of like macro and long term, I think we're just going to continue to see upside for gold. And, we can get a fib on this, for example, like this. And we can look for targets up probably around 2,240. I think it's probably reasonable. But for the moment, I think this is probably the best play for gold that'll probably continue up to here. And we'll sort of see the same sort of action in silver as well in the meantime. For Bitcoin, for example, because Bitcoin is just following, we're in this big falling wedge right now, and we just had a 4 hour bullish divergence as well, which is one of my highest quality setups. I usually risk a little bit larger on these type of setups, right? So we've got the 4 hour bullish divergence on our RSI, right? And that happens usually at the bottom of the falling wedge. So you usually get the 5 touches of the falling wedge. Now this might have one more pullback in here and then go, but I'm pretty sure that this is going to break out and either go straight up like that or come around, and then we get that inverse head and shoulders type shape sort of setup. And I'm pretty confident that this is probably going to come up to at least test 12,000, and then we'll just have to take another look at it there from that point there. I'm not 100% sold that this is going to keep on just taking off and mooning from there or not, but I think we're at least going to come up to test the range high, and we'll see how price action reacts. Then it might come back down and then roll over, but I'm not 100% sold on either way yet. So those are the main charts for me anyway that I've been following at the moment. But I think, just after the Powell announcement and stuff like that, the other day or last night, I think that, we're going to see more upwards pressure, and we're going to see more downwards pressure on DXY, especially if we break through that key long-term support trend from 2011.
Yeah, I might just show people the relationship you spoke about before, which was the dominance against the DXY. So I'll remove this off my chart. And this is what Troy was talking about, guys. And obviously someone asked in the chat about, is Bitcoin inversely related to the USD? So anything that is priced in USD is inversely related if you want to look at the charts like that. But what we noticed here, like Troy was talking about, was basically you can think of the Bitcoin as the king of all the cryptocurrencies and the dollar as the king of all the world currencies. And so you can see when we have a chart like this, I mean, to me, this was really surprising. I've never seen them like overlaid like this so closely. And ever since COVID happened and they fell off a cliff, I mean, just look at these bounces. And in theory, if you try to explain to someone about, well, Bitcoin is related to altcoins or, shit coins, as people, people just wouldn't believe you that there was a relationship that was this tight between Bitcoin and cryptocurrencies compared to how sophisticated and liquid and arbitraged bots, algorithms. You think about everything in the Forex markets that are trillions and trillions of dollars, and yet the relationship between Bitcoin and alts almost mirrors that completely. Like, to me, that is really, really mind-blowing stuff. But
quite fascinating, isn't it?
Yeah. Any other trades specifically that you guys are liking at the moment? I'm just trying to think off the top of my head. I mean, the DeFi coins have had such a good run that I'd rather people be careful. So let's have a look at a few that have been.
I can throw two up if you've got one to go.
I'm a bit cautious of DeFi because it's just been going absolutely crazy. But there's still so many really bullish charts. YFI still looks great. I mean, Trav has been trading that today. So
yeah, I mean, I'll stop sharing and I'll let you guys quickly share maybe like one trade idea each, or maybe one something to avoid. But my message is that, I'm going to continue to hold on to synthetics, even though it's done 150x, and Aave, because they're turning into the blue chip, the best companies in DeFi. And they're going to have the best revenues and reward token holders, and they continue to have developments and good news. So I'm going to take some profits, but I'm going to hold key positions in those. But when I look around at some of these others that have pumped, and I say, well, have they really deserved that huge pump? Particularly with this theme of, it's the next Oracle. And there's like 5 other coins that have basically been pumping because Chainlink has done 100x, and because influencers start talking about them, then traders start talking about them. And if you didn't have any of that, I'd have no doubt that they would have had zero price movement. And that worries me. And it was like in 2017 when it was the Chinese Ethereum and this, that, and the other. And then it sort of reality hits the road that there's not 6 good oracles or the need for them, or they don't all have the best token economics or the same fundamentals as Chainlink. And when I look around and see some of the other opportunities, like you and I were both talking about IOTA Troy or Raiden or anything that's down 90% still, and people are chasing these other things that are just mooning, and I'm thinking, where else can I park my capital that's got way better risk to reward?
Yep, I completely agree. All right, I'll quickly just throw the chart on and show you what I'm looking at, guys. So today is Friday night. On Monday, we've got the monthly close. We've also got the CME contract close, the 6-month one. That closes tomorrow morning at 10 a.m. my time in New Zealand. So there's these 2 marked orange lines. They're both dates and times that matter. The monthly close are these black lines as well. So we quickly jump out to the monthly. We can see here the monthly actually opened very close to where we are right now. So for the last month, it's gone up and down like nuts, but it's come back here as a nice doji candle. So where this closes on Monday is actually quite relevant. If it closes white, there's a higher chance of continuation. If it closes black, which is a red candle for most people, there's a chance that this could be a shooting star top kind of thing, and then we'll come down for a evening star reversal pattern. And then we've got on the weekly as well, just quickly. The weekly high from back here, right? This is from our 2019 top. We need to be closing above that. So this candle is currently below. On Monday, I'd love to see that candle close above that line for strength. And then we've also got this line back here as well. If we can somehow rally above this one, that'd be even better, which correlates to where we are here, which you can see where that's rejected. As for the trade, we'll just quickly bring that back up. I'm going to bring this back up here as well. So I'm a pattern trader who combines it with usually Ichimoku and Wyckoff. To me, at the moment, this is a Wyckoff reaccumulation pattern, and it looks very, very similar to that one here. So we've got the same, we've actually got the same market structure completely. And I'll just quickly open up a. I made this earlier today. It's a published chart of it, and I've actually overlaid the one we just seen on the previous from May to July. Overlaid it with our current one, and it actually is matching perfectly. So if we do match, it'll look something like this, and it means we're going to go for sideways again and probably go into another alt season for a few more weeks. So something just to pay attention to. The altcoin I am looking at the moment is IOTA. We've just had a bunch of 4-hour bull divs off the 618 fib. So if and when we reclaim this level here, which is pretty much what it's dancing with right now, once this is reclaimed, I think we'll run straight back up to here and probably to resistance here. And then whatever Bitcoin does is what it will do. But this is a trade I will take every time. We came down last night and perfectly tapped the order block. I had a bunch of buyers sit here last night waiting. So nicely in a position and just waiting for the 618 to be reclaimed. Then I'll add to that position and then chase the 382. And I think pretty much all the USDT pairs looks like this at the moment. They all have a bit of a falling wedge type pattern playing out, all onto their support with a few bull divs as well. So it looks like the entire market is ready for a bit of a relief rally. But how high that goes and if that is a new high type rally or not, is we'll find out soon enough. And my pick for an alt is IOTA, and my pick for a leverage position at the moment, or I'm looking for an entry at the moment, is once we breach this trend line along on Bitcoin, I'm probably chasing about 11,800 US up here somewhere. Just also keeping in mind there is the CME close and the monthly close, and usually we hug monthly levels during monthly closes. So this is also a target that's 11,300 range. So let's keep an eye on that as well, right?
Yeah.
But I think while this consolidates, maybe these USDT pairs might go for a bit of a rally, right? Because once Bitcoin starts to chill, alts fly, right? And if the Bitcoin pair of this starts flying, then the USDT pair will follow. That's pretty much all I got. I'll leave it there. Won't go too long.
Yeah, I think there's just a lot of money being made, and it's kind of similar to ICOs where we had, some people saying, I lost this amount of money on an ICO, but if you peel back the layers of the onion, some people made a lot of money on ETH, and then they flipped an ICO and then put it into another ICO and whatnot there. In reality, it's a little bit like that house of cards, where it's the same in DeFi in many ways, where some people are going, oh, I made 10x or 100x and I'm getting this much yield and I've got all these tokens, and apparently these tokens are worth this much, but the reality is very few people have sold, and 80% of people have got their tokens locked up. So there's just not the liquidity and the supply and the real price discovery, and that's where I think that there's a lot of room to play around in the DeFi space and the alt space and leverage space and big moves and big gains. But at some stage, people kind of not run for the exits, but just try and take profits, or maybe just go into stable coins and get out of the playground. And we're going to see what the real price discovery is, and when that sort of vacuum comes, and is it going to be a race back to Bitcoin, or is it going to be a race back to Ethereum more these days?
That's a good question. That's a good question.
Yeah, Ethereum.
Where's the dominance going, eh?
Any trades, Kyle?
Yeah, I'll get my screen up. So the first one I want to look at is Ethereum here, which is obviously almost mirroring Bitcoin, but we've got the 4-hour bull divs through here, which is we've actually got 3 of them, right, which is extra bullish. And then it's basically coming up and pushing into the resistance of the falling wedge at the moment. So obviously this is going to track Bitcoin, but we might actually get a breakout earlier on Ethereum. So sometimes Ethereum goes first and then Bitcoin follows shortly after that. One to watch for that is the price action on the Ethereum/Bitcoin chart, right? Which could possibly come up to this key level up here at about 0.04. But it's looking pretty good to me at the moment, broken through a key resistance trend line. It's starting to curl back around. So that's looking quite bullish for me. And so we might actually see Ethereum pump first and lead Bitcoin out of there. One that probably most people aren't looking at the moment, me and Troy have been watching for a little while now, is actually EOS on the daily chart, is having a really nice support resistance flip of this key trend line that it's broken out of, had a nice push, and it's come back, and now it's actually bouncing off that level. So, in an ideal world, this push up to the range high, which is a pretty nice little trade. It's about a 75% move up to there. So, even 75% move, even you're on spot, that's still a pretty nice trade. And then leverage players obviously going to be laughing on that one. The other 2 ones I'm really tracking quite closely at the moment are Tezos, so XTZ, has had a really nice run lately, and it's in a really big falling wedge as well, like a lot of the market currently is. So watching that for a bit of a breakout. The Bitcoin chart has been looking quite interesting lately on Tezos. If I can get it up. It doesn't want to load for me. Whoops, I got the wrong chart.
Got too many tabs open, mate.
I know.
Tabs there.
Here we go. We got this one. So what we really need to see for XTZ here is to get another rally. So we might see it come back to around there and then pull up. It needs to break out through these highs through here, which has been resistance since the start of the year. But I think once it does get out of that area there, we could see it do something similar to Link and really go into price discovery range and take off. So that's something that I'm sort of watching at the moment. It's been in this trading range for a long time. So a break either to the downside or the upside is going to be I think it's going to run quite hard when it goes either way. And then, everybody's been talking about Link as well. So Link's looking decent to me still at the moment. We had this big falling wedge and it sort of started to break out of that and go sideways. But at the moment on the lower time frames now, if we go down to the 1 hour, it's looking a bit more like a symmetrical triangle that might start to play out. And this is actually a wick-off pattern. So you have like the really high buying climax up here, and then we come down and we go sideways for a little while, and then it either breaks down or it breaks up, right? And then you have, this is the distribution accumulation range. You don't really know which way it's going to go, but we've already had sort of a minor spring there. Might have one more and then take off, which the entry for that would be there. If it does play out like that, then you expect it to go to the upside. And so basically what I watch in trade setups like this is this trading range through here. And if we break out the top of this like this, go sideways for a little bit and then get rejected, I'm going to expect that to be an up thrust after distribution. So it's a UTAD. And then you can short once this comes back in like off that point there and then expect more further downside, right? And you can either short to the mid range or to the range low, and then, you know, possibly deeper. You can hold a little bit for if you want to free roll if you think, you know, the market's extra bearish. So that's the sort of main setup I'm looking for at the moment on Link. Obviously, it's a great market to trade. So when it does sort of start to present familiar patterns like a wick off reaccumulation pattern, is sort of something to keep eyes on, because I think it's going to be good opportunities there. But you know, I try not to look at too many charts at once, because it's easy to get caught out missing setups and stuff like that, and you start to lose things. So I try to stick between 5 to 10 max charts that I'm trading. And over the top of that, I find I start to get a little bit confused because it's just too much to concentrate on.
Analysis paralysis, eh? You get too much going on.
Paralysis.
Yes. I will share just a couple of even the fundamental ideas, because I don't mind that EOS trade because EOS have just launched Voice, the long-awaited Voice.
No way.
Their social media platform, and EOS has been massive disappointment. So some of the fund managers I know that were heavily invested in EOS, they basically got rid of their bags throughout crypto winter when it just wasn't getting any traction. And if you think about it, like, Voice is really only their big thing, and it's not really been that successful. I've heard it's launched, so I think this is kind of like their last shot. And when you say about the major trend lines that it's sort of flipped support as resistance or whatnot, that's kind of the TA and FA setup that I'd say, well, this is kind of its shot. So that, to me, I think is a good trade if alts go. EOS has got a lot of catching up to do. It's still down nearly 90% from its highs. Another one that we spoke about already was IOTA a long time ago when it was at 12 cents. I think we were talking about this one, Troy, and now it's up near 40 cents. Litecoin has just had its time in the sun. It's got a fund with the guys at Grayscale. They've just announced that they're rolling out Mimblewimble privacy. They've got the cards. So Litecoin, I think that these old coins are having a little bit of a comeback, the ones that are doing things. So, ADA's had a pretty decent comeback. People are excited about it. But then you've got the completely new narrative of the FTX guys. So Solana, their blockchain I think it's been a real surprise for me. I didn't expect it to perform so well. Today, FTX have announced another IEO that they're going to be running. So the FTT token, to me, more people are going to start to view this like a Binance kind of coin when they start to become the best exchange. We went in this ICO at 80 cents, and now this is nearly $3.80. And the other one is their DEX that they just launched, Serum, and that has been crazy. So the ICO on this one was 11 cents or 8 cents for the early round, and that's sitting at $2.60. So the new one that they announced today was Hedgeit, and this is a decentralized options platform, and one that we've actually been researching here at Nuggets News, myself and Matt. And so what this tells me is that FTX are saying, yeah, we're an exchange, and just like we launched a DEX, even though we're a centralized exchange, and yes, we've already got options, but we're going to be launching decentralized options. And I think they're trying to turn themselves into a hybrid model, and that's actually really good for liquidity, for the DeFi space, for scaling, for all the chains. And Sam, who's a bit of a brilliant, I guess, exchange CEO, but he's been chatting with Andre, who's the Satoshi of DeFi, and they've kind of been poking each other, saying, hey, are we going to do something together? And the potential here, I mean, these guys have just all been killing it. So, yeah, I think my message would be pick some of the narratives and things that you know well and stick to those charts, but you don't have to just continue to chase the DeFis or, what are the oracles that people are talking about? They're on to their sixth next chain link. Look, try and be first at something. Don't be the one that's always chasing your tail.
Agreed. Completely agree.
You look at most of the charts that we've looked at, they're all been pulling back, right? And it takes a while to change your brain. I mean, when you first get into trading, you just want to chase the green all the time. It's like people just look at the watch list. They're like, watch just pumped 10 or 20%. I'm going to go buy that. It's the exact wrong thing that you want to be doing. You want to be buying when everybody else is getting worried and selling their bags. And you want to be selling when everybody else is thinking, I'm going to buy before it goes high. So
many people don't know how to short. And when you look at those charts that go parabolic, and you kind of know that there's a pullback coming, and if you can commit a bit of time or set up your trade alerts or whatever it is, the fact that these alts are regularly pulling back 30% very sharply in a couple of days, or when we get to the top of the next bull market and you kind of know that, hey, a lot of these alts might be pulling back 70, 80, 90%. If you could just build any sort of position and you know that there's like that huge pullback coming, I just think so few people ever take the time to learn that skill.
The way me and Kyle teach that is it's alt season 24/7 if you know what you're doing. When they go up, massive profits. When they go down, massive profits. And they always move down in the same way. They come down, they come for a bearish retest, you add to your short. Go the next level down, add to your short. We've covered this in depth. It's so easy both directions.
Yeah, usually bear markets for altcoins last about 2-3 years, and they pump for like
easy.
a couple of weeks. They pump for a month to 2 months, and then they're down in downtrend for 2 years.
And we didn't have a lot of USD pairs, and that's what I love to trade. So I think you guys like Bitcoin pairs a little bit more. Or I was just never a fan of like BitMEX trading EOS against ADA, against Bitcoin. So now we've got USDT pairs, and I can trade those like on a breakout trade ADA on 50 or 100 times leverage, and just with some small amounts of money, you might only want to risk $100. But when things are really moving and you almost know that it's going to break up for certain, when you're such these all-time lows, the risk to rewards and a bit of leverage, and that's where you can make life-changing amounts of money just like in a few weeks, when this might only happen once every 2 years, and that's the time to deploy that skill. Yeah,
100%. And yeah, I think especially when the market is bullish, like Bitcoin market's bullish and it's dragging all the altcoins with it. You're perfectly right. Like, and that's why I'm loving trading on FTX now instead of being on things like BitMEX, where there's so many more USD markets. I think we were talking about that not like only a couple of months ago now. I'm like, I never really trade anything against USD. And it's because I didn't really have any markets to. I only had Bitcoin and Ethereum that you could trade against USD, and there wasn't really anything else, right? But you do see, like, watching a lot more USD markets, like when Bitcoin's trending up, a lot of the altcoins, they look very similar to Bitcoin, but then they have way bigger percentage moves. Like, Troy's been talking about that one with that topic a lot with IOTA, right? So IOTA's moved like 360%,
700% now.
700% now. So there you go. And Bitcoin obviously hasn't moved. So like a lot of them are out when Bitcoin's pushing really hard on the USD chart, they still outperform Bitcoin. But we'll see. That might not play out forever when Bitcoin starts really going in its full parabolic curve. Because realistically, Bitcoin's still going sideways at the moment for the last couple of years. So,
and I think at the start of the year, I did a big write-up about the halving when everyone was so excited that was going to be this big moon event, and I said I think it's going to be a non-event. But following the halving, the time when Bitcoin ranges or gets boring, and everyone gets obsessed with these alts, and look at it's happening, and it could take off any day now, where people think Bitcoin is boring, but it's like $10,000. It's like 3-4 years ago in the previous cycle at 2016, when $1,000 was kind of this boring-y sort of level,
Stagnant.
and then next thing you know, bang, off to 20,000 from 1,000, and people are thinking that Bitcoin's kind of boring at the moment, and you've got the macro events. Another Bitcoin fund from the Fidelity guy yesterday, and these things are just building the momentum. And sometimes you just forget all the charts and all the news, and you think, like, who is selling their Bitcoin right now or their Ethereum? And that's, at the end of the day, that's what causes the price to go down. Whales can move things in the short term, but overall the big trends, are there people around the world that are going, oh, you know what, like, I'm giving up on my Bitcoin and selling all my ETH, I don't think DeFi is going anywhere. That is just not happening. There's only buyers, or far more buyers, I should say. There's always a seller, but you guys, I think you start to get the point, and that's why we get these sharp patterns that look like they're compressing, and then all of a sudden the whales go, right, the natural momentum's here, let's give it a push and let it fly. Starts the FOMO, new people come in. I got a message today from a guy I haven't spoken to in 10 years, how do I buy Bitcoin? So it does happen.
Yep. I think Bitcoin's definitely ready to do a move with the Bitcoin dominance. Bitcoin dominance has always been a nice front runner for Bitcoin's moves. If you can read the Bitcoin dominance chart, when Bitcoin's going to make a move. And Bitcoin dominance, if I can share my screen for 2 seconds, I'll show you just a wee trick. Referring back to that fib, we look at the previous move up here, and we were in an alt season down here. This was an alt season from 2019 Q1, from about September to the end of March, and then Bitcoin did that 1K candle day, and then all the alts pulled back, and they just bled out about 80-90%. That same thing is about to happen over here, but on an even deeper fib. So it's going to be an even more violent takeoff from here. If we do flip this into support, this could go really high, and alts could have a really hard time if this does happen. So, what you were just mentioning, when Bitcoin does go for that rally, even like my pick of IOTA, because it's well and truly outpacing Bitcoin in percentage returns, I'll have to offload my bags of that because I do want to protect my capital, and I'm going to have to be in Bitcoin for this rally when that happens. Because if we get a 1K candle from Bitcoin again, IOTA, regardless of how great it is not going to move with Bitcoin. It's going to completely die and sell off like everything else, right?
Yeah, and I've spoken about this a lot in detail as well. Let's say that Bitcoin is $100 billion market cap. 10% pullback on Bitcoin while it sort of ranges or whatever, that $10 billion can get spread out into thousands of alts and make them pump huge percentages because of how small they are. And it's the same on the reverse effect when you think of it like that pool that just gets sucked out. And if you've been in the crypto markets for one cycle, you'll know the days when you look at TradingView and it's just all the alts are down 15, 20, 25%, and they're just getting the guts sucked out of them. And that is the money seeking the safety of Bitcoin. So everyone thinks, oh, maybe Link will go a little bit higher, but if you've been through that cycle, protect your capital. That would be my message, I guess, to wrap up. So we've been going for an hour. Any final thoughts from either of you guys?
Yeah, just to finish off on what you were saying, for me, I mean, altcoins are definitely all just about accumulating more Bitcoin. I know you're a massive Ethereum fan. It's probably a bad time to get into it, but I think that's got a lot of upside as well. But still, for me, I'm always about trying to get in and out of alts to get back to Bitcoin. That's when I feel safe, anyway.
Yeah, no, I'm definitely a bit different. Like, I am happy to sit on plant my seeds and wait for my synthetics links. Sorry, not link. Numerare,
Raiden,
Nexus Mutual, Raiden. I'm willing to lose these things and go to zero because I think a few of them are going to do 100x, and I don't want to be timing. And there's not the liquidity to get out of them. So it's depending on whatever your strategy is. Yeah.
That's it.
Anything to Troy to finish off?
I trade strictly USDT pairs now. So I was a very, very big Bitcoin fanboy. And then I saw how quickly COVID moved. And I'm like, well, I really quite like my capital amount, so I don't want to lose too much of that. And when Bitcoin goes and makes those 5 to 10% moves, when you've got a large amount of capital, those figures, they move quickly. So I've gone to a strictly disciplined USDT approach now. And I'm just building capital.
I like it.
Yeah, it's sort of a real safe approach because I'm a bear by nature. Logically, I think all markets should be crashing right now because of the world state, but that's not the case. Reality and the markets are no longer in sync. So for me, I just want to protect capital because I can see how quickly these markets can turn against you. And as a bull, I've seen my account go to ridiculous figures, but they can pull back very quickly. You can lose 5-10% of those. And let's say 7 figures could become 6 figures within 5 minutes. So I'm all about USDT now, all about that tether.
Timing the market beats timing the market, mate. Come on.
I'm pretty good at timing the market.
You're on the wrong stuff.
Man, I still tops and I buy bottoms usually. I didn't get this bottom, but
what's
usually...
the TV show Silicon Valley? You don't want to lose the 2 comma club, mate. Is that what you're telling us in old season? You don't want to fall out of the 2 comma club.
I'm pretty happy where I'm at, and I'm not greedy, so I'll just keep doing what I'm doing. I'm making a nice amount, so I'll just keep cruising along.
Well, guys, that's been good fun on Friday night. Thank you all for tuning in. If you can smash that like button, there's a link down below if you want to check out Kyle and Troy's website, which has come a long way, and their courses. We'll have to do this again, particularly once we get into these alt season and some weekend trades and do some stuff live. I think that's all very, very cool. So yes, be aware of the scammy giveaway ETH ads. They've been every ad on crypto channels for 6 months now, but people still act like they've never seen them. But thanks for tuning in, guys. We'll talk to you again soon. Cheers.
Awesome. Thank you.